Hey everybody, welcome back to the Market Interest, where we talk stocks, finance, and the markets. The energy sector is super hot right now, and if you're an investor in it, you've experienced some pretty solid gains, I'm sure, which is why I want to go over 3 of the top energy stocks that I believe are primed to continue to make profits and be a good benefit for you and your portfolio. Keep in mind, the energy sector is very cyclical and can be very volatile. We know that there's a lot of dynamics happening right now, especially political environment and the crisis with Russia and Ukraine. So this can be a very delicate sector. So make sure you do your due diligence prior to investing. If you want to stay up to date in terms of what the best stocks are, make sure you subscribe to the channel and don't forget to hit the like button. It really helps out the channel. Appreciate it, guys. So let's drill into the first company, which is Gran Tierra Energy. And I know I'm pronouncing that incorrectly, so my apology. Gran Tierra Energy is a company focused on oil and gas exploration and production, specifically in Colombia and Ecuador. So a smaller company, a smaller production. If we take a peek at their market cap, right over here, guys, their market cap is $562 million. So a much, much smaller cap company than those major, like $1 billion ExxonMobil's, Schlumberger, companies like that. You can also see that their stock price is only $1.80. Over a 1-year period, massive returns of 122%. 122%. Huge gains right here. Year to date, they're up 134%, which again is extremely impressive in a short period of time. Even with their incredible gains the past year, their price to earnings ratio, their PE, is still around 6. And typical PE, at least for the S&P 500, is going to be an average between like 16 and 17. So for it to have a valuation of just 6, I like that line. That's a fair area right now, especially for that industry. All right, if we jump over to look at their beta, we can see they have a higher beta of around 1.8. So that means it's 1.8 times more volatile than other stocks within that sector. So there is going to be some volatility. I would caution any investor that there's going to be some volatility. But right now, looks like the analysts are predicting that their performance is going to be short, mid, and longer term rises within this stock. If you guys have been following this channel, then you know the reason I really bought into this stock was because the way that they're allocating their money. They have a $160 to $170 million that's being put to work right within development in Colombia. So they have a lot of promise within this one area. And this is the line that really sold me. The CFO says that they expect their 2022 capital program to be fully funded by cash flow from operations. Now that's huge. That means that they don't need to go to the bond market. They don't need to issue new stocks to gain more capital. That's exciting. That means they're delivering value for their shareholders. That sold me right away. And for that reason, I think that Gran Tierra is a solid pick. The number 2 energy stock is PBR. Petrobras, or something like that. This is a much larger company than the previous one that I mentioned. So this one here has a market cap of about $92 billion. So much larger establishment. In fact, this company is worldwide. Let's take a peek real quick at what where their company is. So worldwide organization here, guys. It's a Brazilian company, but they also have locations in Argentina, Bolivia, Colombia, Chile, Paraguay, Uruguay, USA, the Netherlands, and the United Kingdom and Singapore. I didn't realize they were in Singapore too. So massive, massive organization here and production all around the world. So completely different than a small cap company I was mentioning before. Now, PBR has had some very impressive returns over the last year as well. They're up 72% in 1-year period. And if we take a peek at their year-to-date returns, they're up 27%. Now, just compare that to the overall market, the S&P, which is negative, right? You're getting a really solid company, a really good company that is that's got a dividend, that's producing income, that's profitable, and it's having a capital appreciation to it as well. So really solid returns here. Looking at their forward multiple, of the forward PE multiple, it's at right about 6 right now. Again, energy sector for a multiple of 6, I really like that spot. That's very comfortable and fair with the rest of their peers. If we look at their earnings per share, $2.23, that's on a $13 to $14 stock right now, guys. The other thing I like about this stock is that it's paying a dividend. It's got a yield about 6.5%, 7%. So that's a solid dividend yield. In this point in time, when people are investing, they want something that's guaranteed income, something sure. There's so much volatility in the world right now in the market. So if we have some stock that's, hey, having some really great appreciation to it, but then in the meanwhile paying a dividend, that's something that most investors would feel very comfortable with. Now, if we jump over to their profitability measures, you can see that their gross profit margin is 56% compared to the sector median of 42%. And driving down to the bottom line, their net income margin right here, guys, over 27%, when again, the sector median is only about 6.5%. So massive difference. That's a 333% difference, to be exact. So huge profit margins here for this company. So if they can just continue producing as is, things are going to look pretty good. Now, I think with a lot of these tensions happening between Russia and a lot of other oil producing companies or countries, this company has a really good opportunity. I feel like they're established. They're, again, international. They have their chain set up, their supply chains. So I feel like it's a really comfortable position to be in with a company this size paying a solid dividend. For the number 3 oil and energy stock this evening, I'm going to talk about CPG, Crescent Point Energy. Now, CPG is a North American company. They have their operations in Canada and then part of the U.S. This is still a larger company here. They're a $4 billion organization, 4.3. So this company isn't as massive as our previous company, but still a large organization with multiple territories set up. I'll show you a quick map of their current operations. You can see they have Central Alberta, Saskatchewan, and North Dakota. Now, CPG is looking quite promising, actually. Disregard the fact that they had a 75% return over the past year. Disregard the fact that they had a over 42% return year to date. I'm excited that they're announcing that they're going to be doing some buybacks. If a company is producing enough profit and they've got enough cash on hand, but realize that their stock is undervalued or potentially undervalued, then it's wise for them to repurchase those shares back at a lower value in order to increase shareholder value. I'm excited about that. And not everybody wants a dividend for tax purposes, right? I'd rather have a capital gain than a dividend at times. So again, really good returns. They have great returns for the year, great returns year to date. But the fact that they, one, do pay a dividend, they have a yield on that, but then they're also talking about doing some share buybacks on top of that, that's pretty exciting. Let's look at their profitability measures. So their gross profit margin, 72%, which is insane. Let's drop it down to the bottom line. Their net income margin, 83.5%. That's just knocking it out of the park, guys. That is incredible. The sector median is only 6.3%. So this is an extremely profitable company. Clearly, they're generating a lot of cash here. Now, if we take a peek at the beta of the company, so it's 3.34. So that is a super high beta. That's something that as an investor, you guys have to be aware of. If you're getting into this stock and you're not comfortable with volatility, this isn't the place to be, all right? This is a volatile stock. It's 3.3 times more volatile than the average stock about its area. So something that you should definitely be aware of. Looks like the performance outlook, at least in terms of technicals, looks like they're midterm. They're not looking too positive in terms of the midterm, but short term and longer term, nine months plus, looks like a fair area. And the last thing I like about this company is that they're in North America. So I'm really not sure what's going to happen with the supply chain with the U.S. and where we're going to eventually be getting our oil from. But this is a Canadian-based company, and we've always had a good partnership with Canada. And so I'm not sure if we're going to tap into a company like this or maybe some other companies in North America. But I at least like that it's a neighboring company close to America where we can easily tap into some of their resources. So a lot of movements happening right now in the energy sector, guys. Some really, really good opportunities for you to take advantage of this. I would, again, just caution you to invest wisely. Do your due diligence. Do some research on each of these companies. See if it does make sense for you. And feel free to reach out. If you're not sure if this is a good company or any of these are good companies for your portfolio, I've got a link in the description below. We can have a one-on-one consultation and find out, is this a good investment for you or if it's not as appropriate as you'd think. But again, there's a lot of movements happening in this sector, guys. And just today, Warren Buffett, he's invested billions of dollars into an energy company, billions of dollars, and he's been sitting on billions in cash for a long time. He hasn't had opportunities, but he knows that this war is happening. There's a lot of tensions. The U.S. has just declared that, hey, we're not going to be buying Russian oil anymore. Where are we going to get it from? So that's the big question. And if you can start making some moves, hedge your bets in certain areas, then hopefully this could be a really good time for you to make a decent profit while the rest of the investments in a portfolio seem to be tanking. So maybe shifting from some of these tech stocks, these growth-oriented stocks, looking for more value-oriented stocks is the way to go. And right now, I really think the energy is undervalued. Just looking at their multiples, seeing how there's a lot of dynamics within the political tensions within the world, I think there's creating some opportunities there for people to take advantage of. If you guys have any questions at all, want to reach out, feel free to reach out on Facebook. Unfortunately, we can't do any videos or unfortunately, we can't do any comments within YouTube due to compliance reasons, but feel free to join us for a conversation on Facebook. Don't forget to like, share, and subscribe. Appreciate it. It really helps out the channel. And look forward to seeing you guys next week for the next video.